And finally, Trump is making moves on the dollar. You get a tariff. You get a tariff. You get a tariff. Trump's policies are hinting at, checking notes, deflation across the board, folks. Is this good? Is this bad? I don't know. All right, Mike. We've been talking about we talk about the dollar all the time.
All the time, every time.
Dollar going up, dollar going down. And I was making this pitch. Hey, the last time that Trump came in the office, the dollar basically peaked and then it dropped like 15% over a year. And that's what I was sort of like hoping for. Liquidity gets injected to the markets. Stock market goes all-time highs. Bitcoin launches, all nice and good. I saw the Scott Bessent, the new Treasury Secretary, interview with Bloomberg. And he's been making the rounds at all the different news stations. And I'm not so sure anymore that that's what they're betting on. It looks like what they're hoping is, or what Trump wants is a strong dollar. He wants the dollar to be up because, well, I don't know why Trump wants the dollar to be up. All right, I'm trying to get his view. What does he actually think about the dollar? And let me just show you this from 2016, 2017. Let me show you 2 quick clips here because I just want you to see the disjointed nature of the Trump policies around the dollar.
January was a wild ride for those invested in the U.S. dollar. At one point, the currency hit a 14-month high. But by the end of the month, the U.S. dollar index had fallen 2.6% against a basket of currencies, suffering its worst January decline in 30 years. The reversal came after a statement from U.S. President Donald Trump saying the dollar had become too strong. A strong dollar makes U.S. exports more expensive, hurting U.S. manufacturers, a sector Trump has vowed to revive. His statement indicated a dramatic reversal in dollar policy.
The strong dollar policy has been the cornerstone of U.S. fiscal policy towards the dollar for the past 20 years, ever since Robert Rubin under President Clinton made it so. And that really was a sign that, you could come to the U.S., you can invest in U.S. denominated assets, and the U.S. government would not touch them. They would not intervene. So the fact that this may be off the table takes away what's been a 20-year assurance for the greenback.
All right, so that one quickly, and then I'll just pull up the second one. So that was back in 2017. Trump wanted a strong dollar. The dollar got strong. Then it was like, okay, it's too strong right now because this is hurting what we needed for our manufacturing base. So I just want to show what, and then Steve Mnuchin came out some months later on, who was his Treasury Secretary at the time, and then he said something about the dollar, and then immediately Donald Trump backtracked on what that guy said. So let's just play it real quick here. This is 2017. This is 2018.
Administration is trying to downplay the Treasury Secretary's comments on Wednesday that a weak dollar is good for US trade. Well, that's certainly a truism. Everybody knows that. However, it is a departure from the conventional wisdom that America is best served by dollar strength. Here in Davos, Mnuchin tried to clarify, saying he's not concerned about day-to-day fluctuations.
In the short term, where the dollar is not a concern of mine, okay, that it will fluctuate. That in the short term, there's obviously benefits and issues with a lower dollar.
Well, yes, this was the effect of the Treasury Secretary's original comments and the clarification. The dollar fell, then fell further to a 3-year low and only rebounded after President Trump told CNBC the Secretary's original comments had been misinterpreted.
I think they were taken out of context because I read his exact statement. I'll tell you where I stand, which ultimately is very important. Number one, I don't like talking about it because, frankly, nobody should be talking about it. It should be what it is. It should also be based on the strength of the country. We are doing so well. Our country is becoming so economically strong again, and strong in other ways too, by the way, that the dollar is going to get stronger and stronger. And ultimately, I want to see a strong dollar.
Okay, so he wants a strong dollar, he wants a weak dollar, he wants a strong dollar. Trump doesn't necessarily understand that as a world reserve currency, you don't have the luxury of not paying attention to what's going on in the dollar. It literally messes up the entire world when you guys don't pay attention to the dollar. So that's one thing. So that was 2017 2017 and 2018. I only have one more clip to play with you on this thing, which
Okay.
is Scott Bessent now, his Treasury Secretary now, talking about the talking about the U.S. dollar.
And now, as in your new role, you oversee U.S. currency policy. I'd like to ask you, what does a strong dollar mean to you?
Well, first of all, the strong dollar policy is completely intact with President Trump, and I was very happy at his Economic Club of New York speech in August when he reemphasized the importance of maintaining the dollar reserve currency status. But let's think about, what does a strong dollar mean? It really means four things. One, that when we think about a fiat currency, a piece of paper is credibility. So a strong dollar is credibility and a rule of law that is backing it up. Two, it means a composite price on the screen, the Bloomberg Currency Index, that is the dollar moving up against that. Three, it is a bilateral price. So what's important to remember is the dollar is either weak or strong versus something else. So we want the dollar to be strong. What we don't want is other countries to weaken their currencies, to manipulate their trade. And then fourth, that we want to have the best policies that create the environment for a strong dollar.
All right, so all that bothers me to no end, because what I'm not ever hearing from these people is the truth, which is you can't have a strong dollar, the US dollar, the world reserve currency, you can't have a strong dollar and then not expect other countries to devalue their dollars in order to compete. They have to. That's the only way they're going to get the dollars. They have to print their own currency in order to compete that way. And so Trump has said that if other countries do that, that he's going to put on 100% tariff on those countries, further exacerbating the thing. So please, guys, translation, that's deflationary all around. There's not enough money going around. The dollar going up means there's not enough dollars go around. And he's like, hey, I'm going to stop whatever you're doing that will increase the amount of dollars going around. This to me is crazy. This is insane. So I don't know. Do you have any opinions on the strong dollar talk? One, do you believe it? And two, what do you think the effects might be?
I can tell you that I'd be long the dollar in short emerging markets at the moment.
Absolutely. Well, remember we were saying a couple of weeks ago, like I think the dollar goes to 120, 129, something like that. And I was like, I look at the chart and it's just that, and I never really know what will make it go there. But then inevitably something happens and it makes the charts move the way that it move. And then when I hear this talk of tariffs and protectionism, which is fine. Like I get that's good for America in order to do that. But the effect that it has on the dollar, it could make it skyrocket. China right now is in full-on recession. The Canadian dollar is down almost 50% versus the American dollar. Like it is problematic all around. And ironically, the higher interest rates that are happening in the United States make the U.S. Treasury and thus the dollar more attractive to outside investment. So it makes the America sort of like suck in more of the dollars and the productivity from abroad. As you guys get your house in order, you guys become more attractive, which is the opposite of what you need to do in order to get the dollar to come down and spread out across the world. It's a weird quagmire you guys are in, where your politicians have to institute policies that are good enough to get you guys going, move along, but not so good as to make you guys so attractive that all the money leaves from everywhere else. But long dollar and short emerging markets, it's like that's gonna be a golden play.
For sure. And I think the thing to typically watch out for there would be around the potential for trade war escalations and obviously any new tariff announcements. I mean, all of those are going to have a direct impact on those exact trades. But to your point, it's a tough one because policy will obviously have an impact on a lot of this. And I don't have an opinion about where it should be. Maybe to Trump's point, like he thinks no one should even be thinking about the strength of the dollar. I don't think that's correct. However, it is sort of last on my list of all the things that I'm trying to pay attention to. GDP, the overall earnings of the market. I'm trying to keep track of price action there. I do love that you introduced the dollar in every one of our episodes here, because I think it's an important factor to pay attention to. I just don't have a strong opinion about where it should lie or how much control we really have on that aside from governmental policy.
That's so interesting. Right. And it makes sense to me because for the American populace, there is no advantage to a politician coming and saying, hey, we're going to have to devalue our currency, print more dollars, and send them abroad. You don't understand. That's the deal we have with other countries, is in order to help them. Like, they'll be like, what are you talking about? No, I want my dollar strong. The idea of when you have American dollars and you have to buy something abroad, it's like, great. Why wouldn't I want that power, that strength?
And we've enjoyed such a low inflation environment for so long, with exception to the COVID era, obviously, that we've never really thought about our purchasing power, and relative to other countries. In many cases, it's always been an improvement. You've got this opportunity to take $1 and spend a whole lot more in another country. Mexico's always been pretty positive, except for a few instances I can think of. I was able to spend more in Canada with US dollars than the other way around. So the perspective I think we tend to have as American citizens is that, the dollar is still a dollar. It's I can still go buy $1 worth of things. Yeah, exactly.
Excellent. Well, one good thing for me is that, or what I find interesting is that Canada, in its tariff war scuffle or whatever, I don't know, you can call it a war. We're sort of like 7-year-olds next to a 40-year-old, but the prime minister said, hey, you guys should buy more locally. You should buy more within Canada, and that way you sort of avoid these tariffs, which I sort of like. I like this idea that
I think that was the objective with increasing tariffs here, was to increase American manufacturing, which should encourage more buying from local companies as well.
Right. Well, whereas America has the whole Triffin's dilemma thing they have to deal with, the balancing of the currency, we never had an excuse in Canada for why we were so terrible at managing our resources and all that. Like, we were subsidized by the United States to the tune of hundreds of billions of dollars, and we sort of got used to that. You guys are our neighbors and all that. We get to trade with you guys. You guys pay us in the American dollars. We get almost get to have that sort of benefit that you guys have, and so we never took advantage of our resources. We never took advantage of local businesses. We never did anything to do that. We don't even build houses, for God's sakes. Now they're like, well, maybe we're gonna have to start doing all that. And I go, hey, that's pretty good. I'll take that, where Canada turns inward and says, hey, we have all the resources, let's use them for a little bit. So that's not so bad.
Yeah. Okay. Some good outcome. Maybe shorting the emerging markets is a good play, but don't short Canadian dollars.
We're essentially a third world country in the first world. Like, that's essentially what we are. Our currency falls 50% versus the dollar over the last 20 years. That's emerging market territory.
So you're seeing more room for downside, despite the Canadian dollar looking like it's really kind of hit a support zone here at 68 cents relative to the US dollar.
There's a mentality shift here, and we don't really know what the world looks like where the empire turns inward. We don't know what opportunities. Like, I was going over it, and it's like tariffs in some ways can be inflationary, and then in other ways can be deflationary, because if we start doing that, actually our currency will stop falling as we stop chasing the dollar in that way. We stop denominating certain debts in dollars. We sort of ease that tension. It's sort of like your credit card. If you stop spending on the credit card and now you start paying a little bit, all of a sudden your monthly payment goes slightly lower. You go, wait a second. I'm spending less, like I'm having less money, but I'm actually saving more. It's this weird sort of balance that's happening. So I don't know what it looks like. Tariffs might ultimately end up being deflationary, and I'm all for deflation. I'm a team deflation 100%. I would rather massive deflation and a depression because of it than massive inflation, where the only solution is dissolve the currency, jubilee all the debt, and let's start all over again. That's a nightmare. Right. I'll take deflation.
Agreed there.